At current prices, the banks are going to have to pay Mexico $6 billion.
It was a historic week last week for the oil market, WTI trading in negative territory, but there was one actually clear winner, and it was Mexico. They have this secret weapon, and you wrote about it in detail in 2017. Explain to us this hedge.
Well, an oil hedge is not that different to buying insurance for your car. It's something that you buy and you hope that you will never have to use because the car will not break or will not have an accident. The oil hedge that Mexico buys is that similar to insurance. They lock in a minimum price for their oil. So that means that if prices go higher, they're still able to sell their oil at a higher price. But if prices drop below a level, and this is about 45 barrels a dollar for the Mexican export blend of crude, then they sell at 45. It doesn't matter how low it goes, Mexico still sells at $45 a barrel. And obviously right now, that insurance is working, and the banks who provide the insurance to Mexico are going to have to pay Mexico a lot of money, billions of dollars.
Mexico's been making a lot of headlines. We were following those OPEC Plus meetings. It was a standoff between Mexico and Saudi Arabia. Was it because of this hedge that they were really able to run a hard bargain with the Saudis?
It's not the only reason. There was a lot of domestic politics and a desire by the Mexican president to increase production. But certainly the Mexico hedge meant that he went to those meetings with Saudi Arabia with a very strong card. The Saudis cannot threaten him to flood the market and send the price lower because below $45 a barrel, it doesn't really matter for Mexico. It's like someone threatening you that is going to scratch your car. You have a very good insurance, it doesn't really matter anymore.
It begs the question, Javier, why aren't other countries also hedging their oil prices?
Well, the main question is money. It's a very expensive operation. As buying insurance for your car, it costs money. In the case of Mexico, the country pays about $1 billion every year to several banks in Wall Street to obtain this insurance. It's not cheap. It's a lot of money for a country like Mexico, and certainly will be a lot of money for other countries. And it also requires a lot of explanation. You have to explain to your voters what you are paying $1 billion to Wall Street as an insurance that you may not need. You see, mine all of these years, when oil prices were very high, and Mexico was spending $1 billion in insurance, and they never used it. But this year, that $1 billion is probably going to save a lot of money for Mexico. At current prices, the banks are going to have to pay Mexico $6 billion. So that $1 billion is coming very handy.